Have Kedar Vaze, the Group CEO of SH Kelkar, who joins us in the studio today. Hi Kedar, thanks so much for joining in today. First things first, you're looking to raise close to around 500 crores, I believe, but we have an outline only of around 150 to around 200 crores of what these proceeds will be used. Is this IPO only to give an exit to Blackstone? Just give us the details.
So the company is a cash generating business, so we don't have too much capital investment in the company. So this is primarily a IPO driven with an exit for Blackstone. While we are doing that, we also decided to take in money in the company to write off all the debt that is on the books of the company. So this will completely make it a debt-free company, and then we can use the balance sheet to leverage to look at long-term large acquisitions or any long-term JV or large capital investments.
Okay. We'll come back to your plans regarding, a long-term acquisition or perhaps a strategic tie-up. But before that, your revenue growth seems to be slowing. In FY13, it was 16.8%. FY14, the top line growth was 14.3%. And FY15, it was at 10%. What was the reason for that? And what can you tell us about, the revenue growth in the coming years?
So about 20% of our revenue comes in our subsidiary in the Netherlands. And in FY15, because of the euro to rupee conversion, that has come down in terms of revenue. So that's in the same currency basis, it's actually not degrown or it's not slowing down. It's an effect of change in the currency of euro to rupee conversion.
Okay. So long-term growth, revenue growth for the company would be?
So if you break up the last 5 years revenue growth in terms of the Netherlands subsidiary, which is almost at full capacity, and the business out of India, the business out of India is doing about 18% plus CAGR growth. And I think that is very much sustainable, going that the market is growing at that rate.
All right, Kedar, give us a few details and what's your current market share? I think you're a few percentage points behind the market leader, and you told us that you're going to be, maybe you look at acquisitions as well. So are you gunning for the pole position?
So we have one of the largest companies in the Indian domestic fragrance market. In terms of the market share, the competition is largely global MNC companies, subsidiaries in India. So they have a large share, but their large part of their customers is the global MNC brands. Vis-a-vis the brands from Indian domestic FMCG companies, we have by far the largest market share in the country.
What are those numbers, if you could give us?
We are roughly 21% of the market of 50%, which is the domestic FMCG companies. So roughly 40% of the market.
Okay. You spoke about the possibility of an acquisition or a strategic tie-up, and your balance sheet is now open for you to lever that for any of the above. Take us through. Have you identified an acquisition? What could be the nature of the strategic tie-up? Would it be with an MNC player? Why would you need it?
So we don't have any specific targets or specific discussions at this point. We have been exploring various opportunities for the last 2 years. But we don't have anything specifically tied up. The industry in general has been one where there has been a lot of consolidation globally, and we see that happening in the Asian market and Indian market going forward. We are prepared for that as it comes.
All right, then. Could you give us some details about the anchor book investors as well?
So I think we had a lot of demand on the anchor book. I think the names are already out in the media. A lot of interest from large domestic mutual funds, as well as global FIIs like Capital and so on and so forth. So long only large FIIs have invested in the anchor book.
Yes, the company raised 152 crore from anchor investors at the upper end of the price band, which is at 180. And marquee names like T. Rowe Price, Birla Sunlight were some of the investors in the anchor book. But take us through what the capacity utilization is at your 4 manufacturing plants.
So we have been through our capital cycle in the last 7 years invested almost 180 crores in capacity expansion. So our capacity today is less than 40% utilization across all the plants.
All right, Kedar, just one final question. I know you have land in Raigad and you have some operations in Mulund as well. Would it make sense just to transfer everything to Raigad and in fact develop the current plot in Mulund? I believe it's around 10 acres. If you just take a rough valuation, it could be 400-500 crores. Is that an option going ahead?
So we have actually 3 manufacturing facilities in India, one in Raigad, one in Vapi and one in the Mulund facility. The Mulund facility is largely 100% EOU, so there's no immediate plans of moving that out.
All right, thanks so much, Kedar. All the best for this IPO going ahead.
Thank you so much.
But time to slip into a short break. On the other side, we'll be joined by Kunal Botra as well as JK Jain. Stay tuned.